What's up, guys? Stas here. So I wanted to hop on and make a video going over some stocks that I'm looking to buy the next time the stock market crashes. And am I saying the stock market is about to crash again like it did in March by 30 to 40%? No, I'm not saying that. Can it do that again? Can it crash again? Absolutely, right? But all I'm saying is the next time the market sees some sort of correction, whether it's 10, 15, 20%, or 30 to 40%, I'm looking to buy these stocks that we're going to go over in this video. So if you guys find value in this video, as always, hit that like button for me, consider subscribing to the channel, and check out all the free links down below in the description box if you want to be further connected with the Strive Smart community, and if you want 2 free stocks from Webull valued up to $1,400, and that's if you deposit $100 into the account. That's when you get the 2 free stocks, and all of those are linked down below in the description box. So stock number 1 is Google, and many of these stocks on the list, guys, I actually already own, so I want to add more to my position on the next market correction or crash, whatever you guys want to call it. And some of the stocks I don't own, and Google's actually one of those that I do not own. And you guys can see it was at $1,500 per share before the crash, and it went from 15 all the way to 1,000, trimming about 30 to 35% of the stock price. And ever since the rebound, Google has pretty much recovered all of that. It's bounced about 30 to 35%, more like 30% off of the lows. So I didn't buy it during this first dump here, during the first crash. So me buying it here doesn't make sense, which is why I want to wait again for the next drop. And ideally, I'm looking to pick up Google shares, honestly, under $1,000. That would be under intrinsic value, in my opinion, if we're looking at the long-term value of Google. Anything under 1,000, 900, even 800, that'd be unbelievable. But to be honest, anything from 1,100 under, even 1050, 1,000 under, that's going to be a great price for me when it comes to Google, right? If you guys try and understand the business here, they have Google, the search engine, which is obviously the biggest search engine, and they also have YouTube, which is another massive search engine in itself. And on top of that, they have ad products, right? They have ad services and so many more, models and business models within the business that brings them so much money, right? Google's almost like a monopoly when it comes to, search engines, if you really think about it. And it has that type of brand that people just say, just Google it, just do this, just Google it, right? When your brand becomes a verb, right? Just Google it. That is very, very good. That's a positive thing, and it's lifelong lasting, in my opinion. Unless something crazy happens in technology, I think Google is going to be here for our lifetimes, quite honestly, right? Unless some drastic measure happens again that we can't foresee in the next 10, 15 years. Who knows what's going to happen, right? But overall, I think Google, next time the market goes down, it is a very good buy, and I plan on buying in. And EA is another one that I absolutely love for the next time the markets come down. If you guys realize, and you guys are in the industry of video gaming yourself, and you guys understand video games, you know that the new Xbox is coming out over the next couple of months, and the new PlayStation is coming out as well. And this is going to bring in a lot of gamers in droves. They're going to buy all of the new games for the new systems, and it's kind of like when a new iPhone comes out, but on steroids, right? Because the new games come out every year, but the new systems, they don't come out every year, right? They come out every 5 to 7 years or whatever. And along with the systems, the games, they get better, more people come on, and et cetera, right? So I think that's going to be very good, obviously, for video game companies like Electronic Arts, which I don't own right now, but I plan on buying, and Activision Blizzard, right? Activision Blizzard's one that I actually do own. This one's really known for the Call of Duty Brady franchise. And you could argue at this point that without a correction in the market, these stocks are still at a pretty solid value, because if we pull back a bit on these video game stocks, you guys can see that they're still pretty, I mean, they're close to their highs, right? Activision's about, let's say, $10 off from the highs, so about 10%, but they're still not fully recovered, because if you guys remember, video game stocks took a beating about 2 years ago. Activision fell from 85 to 40, and now it's back to about 75. So yeah, we could get a better deal at about $55 to $60 for the stock, which is where I would want to buy more of it, which is where I would like to add more to my position. But in the 60s, high 60s, low 70s, that's a pretty decent deal as well, in my opinion, looking over the long term. And same thing with EA, right? You guys can see the stock went from 150 down to 73. This was a very good value here in the 70s, 80s. Now we're back to the 130s almost. And again, from 130 to 150, there is still potential here, even without a pull down in the markets for the long-term investors here, but I would probably like to see a pull down. I'd say down into the lower hundreds, 105, 110. That is where I'd start and feel comfortable starting a position here in Electronic Arts to really take advantage of the video game, movement here as the new games are coming out with better graphics on the new systems that will bring in more customers over time. Right? And a couple more here you guys can see. This is my watch list, by the way, if you guys can see my mouse here. A couple more here are Visa. Visa, I don't own this one long-term in my long-term accounts. I want to buy into this, but you guys can see at a price right now, $190, not too far off the highs. It's not too attractive of a value if we're just looking at the price here. The PE also not too attractive. So overall, to get a more stable payment processing company, because if we're looking at Visa versus MasterCard, I'd say Visa's a bit more stable. They're not growing as quickly as MasterCard, but that's the thing, right? They're a bit more stable, not growing as quick as MasterCard. So that could be a good opportunity for more of a, value play. But if you're looking at MasterCard, they're growing a bit more. That could be more of a growth play, although there is value in that stock as well. But I own MasterCard. It's not on this list. That's a completely different stock. But either way, I'm bullish on the payment processors, fintech stocks as well in the long term. And Visa's one that I'd love to add to the portfolio. But again, at $190, not too attractive. I'd like to pick up shares mostly under, this might be a bit picky, guys, I know, but mostly under $160 at least, and ideally under $150 to $140. That would be a steal price, in my opinion, for Visa when it comes to long term. And another fintech stock here, again, I'm bullish fintech, is Square. I want to add more to my Square position here, but again, this thing has tripled ever since it bottomed in March, so I need to see some sort of cool down in the stock, some sort of correction to even justify buying more in my long-term account, guys. So Square, I'd say it needs to cool down at least to $70, $65. And guys, with a growth stock like this, as hot as Square has been, it might not even do that. It might not even go down, even with a pull down, even with a correction in the markets. We'll see what ends up happening. But overall, this one, I'm thinking it might just be a hold at this point, because I don't know if that correction is going to come at least close to my average cost, which at this point is around $50 to $60 on the stock. And a couple more here, guys. PayPal's another one that I have in my accounts. I was buying a lot in the 80s to 90s on PayPal and into the hundreds. And now we're in almost the $170 range on this fintech stock. They also own Venmo, if you guys didn't know, which is a great app to send peer-to-peer payments. So PayPal, I'm not going to lie to you guys, is overvalued at this point. At this point, buying does not make sense. I'd like to see a pull down at least to $125 to $130 before I even add any more to my position. And quite honestly, at that point, I probably wouldn't buy because, again, I've been buying in the 80s, 90s, low hundreds, so I already have a pretty low cost basis on this. So I'd probably want to see it get closer to the cost basis before I add more money into it. And two other interesting stocks that I don't actually own are Lowe's and Home Depot. And let me get into this a little bit. These are two stores and two industries that I believe Amazon won't really disrupt. We've seen a lot of industries be disrupted by Amazon, and I truly believe that the home improvement retailer industry, where you go in, you look at the gardening, you look at the plants. They have a plant section, at Lowe's and Home Depot. You look at all the tools. You look at this, that, the third for, painting, building your house, fixing the roof, doing this. I think that's always going to be there, right? I believe people are always going to go in, pick these tools up, put them in their truck. I don't think Amazon's going to be able to work out the logistics. Who knows? I'll be wrong. But to actually ship out these big, heavy-duty products. So Lowe's and Home Depot, I think they're going to be here for a long time. I believe they'll always provide value, to customers. And looking back at Lowe's here, again, I don't own either of these stocks. This is one of the stocks I regret not picking up. I regret not picking it up under $80, $70, $60. That was such a steal, guys. This stock has gone up like 110% from that point. And realize these stocks, Lowe's and Home Depot, they're good dividend stocks too. They don't have a very high yield at this point because the stock's price is very high, but their yield's around for Lowe's, I think 1.5%, Home Depot somewhere around there. So if you're interested in a dividend stock for the long term, a potential dividend growth play, Lowe's and Home Depot could be great. But overall, I'm not looking to buy Lowe's here at 136. I'd probably wait until under $100 per share, guys, quite honestly. Maybe $110 per share. That is where I'd start to just dollar cost average into some of Lowe's. And for Home Depot, you guys can see very similar, right? We're close to all-time highs. And mind you, these home improvement stocks have been doing very well ever since we've been in quarantine. The U.S. has shut down. More people were stuck in their houses, going to these stores to improve their houses because a lot of the time they have nothing else to do, or they have a lot more time on their hands to do side projects, right? So that makes sense, and that's why they're at close to all-time highs here. So for Home Depot, I'd need to see it go down low 200s. 210, 205, and under 200 would be ideal. 180, 170, that'd be great. Anywhere at that point, I'd be averaging into Home Depot. So those are a bunch of stocks here at this point, guys. Another one is Amazon, right? E-commerce giant. Again, it didn't really disrupt Home Depot and Lowe's, but it is disrupting other companies. It's the reality of the world we're in right now. Amazon's trying to monopolize everything. I don't think it'll get to that point. Overall, I think it is wise to own some Amazon in your portfolio. And mind you guys, none of this is financial advice. Don't buy any of these stocks mentioned in this video based off of this video and based off of my opinion. If you like these stocks, go do your own research and make your own decision. But just figured to put a disclaimer here, do not buy these stocks based on my opinion. But for me, with Amazon, I think it's a must own. I was buying in at the $1,600, $1,700, $1,800 level, and now we're well above that point. So I'm looking to buy in anywhere under 2,000. I'm waiting to see if it goes under 2,000. That's where I'd end up buying more Amazon. But with the interesting time period we're in right now, I don't know if Amazon will go under 2,000 with how well the stock's been doing, despite the crisis that we're in. And it makes sense because the business itself has been doing well, which is why the stock's been following along. So overall, guys, that's it for this video. Those are a bunch of stocks here. Oh, I almost forgot. AbbVie's another one. Healthcare play here, high dividend payer. Go look into this one. I really like this one as well. And yeah, that's pretty much it for the stocks that I'm looking to buy at a cheaper price from where they are now next time the market goes down. Whether it's 15, 20%, or whether it's 30 to 40%, the more the better, because we get cheaper stock prices, the more the stock market goes down. But yeah, that's it for the video. If you found value in it, hit that like button. Let me know down below in the comments your thoughts on these stocks. Let me know 5 stocks or 3 stocks, 3 to 5 stocks, whatever you guys prefer, that you're actually looking to buy the next time the markets drop. And don't forget to claim your 2 free stocks from Webull, valued up to $1,400. That's linked down below in the description box. All you have to do is deposit $100 into the account, and that's when you get your good old free stock. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.